Hello, let's go ahead and get started. My name is Hunter Smith with Metastock, and I'm excited to be uh, hosting this webinar today, Trading with One Indicator Only. Today we have a special guest from Tradepedia. Before we get to the intro here, I'm going to go ahead and cover our disclaimer. Let's get the legal part out of the way. This demonstration is designed to inform you of the wrong slide that I have up here. It's we will be covering trading examples today. They're not going to be recommendations to buy or sell. These are guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors and traders who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of our software and any trading strategies or any information provided in connection with the company. We have our first blooper for the day. Put the wrong slide in there. Today, we have Mr. Habib Akiki from Tradepedia. Habib has been working there for quite some time. He has 10 years experience covering the foreign exchange market, money markets, fixed income securities, tradable commodities, equities, and much more. Quite an accomplished trader. He's actually the senior market strategist of Tradepedia. Tradepedia is a company that we've worked with for quite some time and does some really, really amazing work and training. Habib, can you hear me okay?
Yes, I do. Yes, I do.
Wonderful. Well, without further ado, I'll go ahead and just change the presenter over to you. Make sure that you're all set up.
All right, great. Just let me share my screen. Hello, everyone.
Perfect.
I hope you can hear me properly and you can see my screen.
We can. Looks great. Sounds great.
Excellent. Please, if you have any questions at all during the session, feel free to type for me in the questions window. It would be impossible for us to unmute everyone here, but please feel free to type for me any questions you need to ask. Use this questions window to just communicate with me. So, in tonight's webinar, we're going to discuss how to trade with one indicator only. Before I start, please allow me to introduce to you Tradepedia. So, who we are. Tradepedia is an independent institute, financial institutes. We are located in the heart of the Dubai International Financial Center in the UAE. With our headquartered here in Dubai, and we have trainers all around the world. Now, Tradepedia, what makes us unique is the way Tradepedia is made up. It's made up of three different departments. The first department is made up of certified instructors. We deliver training on technical analysis, basically in more than 8 languages, and we have trainers all around the world. Or our instructors are certified by the International Federation of Technical Analysts, and this is what gives me the right today to talk to you about technical analysis. I'm certified. I have the CFTE Level 2 diploma, and so all our instructors as well. Now, the second department is made up of certified traders. All the traders who trade the company's funds are certified to do so. I personally have a certificate in portfolio management from the Chartered Institute of Securities and Investment, and all our traders as well. And the third department is made up of the software developers. Yeah, the coders, the programmers who helped us a lot during the past years in developing our tools, a lot of technical indicators that will help us a lot in the analysis process. As you know, everything is becoming automated nowadays. And that's why we developed our methodology in trading. We developed a lot of indicators in order just to help us in this process. And this is what I will show you in our webinar tonight. Now, altogether, we have worked and we have developed trading systems and tools based on technical analysis, risk management, and behavioral finance. And this is what we teach and provide to our students. Before I start, before I start any webinar or any seminar or workshop, I always like to discuss the ingredients of success. I would like to start this presentation by discussing the elements of success. What do we need to be successful in this field? Now, most successful traders agree, guys, that successful trading or investing requires, first of all, a method, right? A working system, a certain strategy. It could be technical analysis, my favorite. It could be as well fundamental analysis, my second best. It could be market rumors, or maybe just gut feeling, the best method in the world. Now, what do we need is we need a method. What method we are using is not very important. The important thing is to have a method, because without a method, we are just walking randomly. Now, we need a good method, of course. Now, when we start trading, we are always seeking different methods. We are always trying different methods. And tonight I'm gonna illustrate, or I'm gonna show you um, our method, or one of our methods that we use to trade the markets. Now, an important thing is, do not mix between different methods at the same time. So when you are when you are experimenting with a method, it is very important to use this method for a good period of time. So 3 to 6 months at least. It is very important to stick to one method for a 6 month period. And the reason is so you can evaluate this method. If I'm buying because one technical indicator gave me a buying signal, a buy signal, and then I'm selling because um, one economic indicator, just one economic release came out and it was worse than expected, and then I'm buying because I had a dream that this share is going to go up, at the end of the month, I'm not going to be able to evaluate properly which method is working and which method is not. That is why it is very important to test the method for a period of 6 months, a good cycle, let's say, because sometimes with a small modification to this method, we can turn it from a losing method to a very accurate method. Now, no matter which method you are using, on its own is not enough. On top of a good method, we need money management. We need to control our exposure. We need to control our risk. Why is that? Simply because there is no 100% accurate method. Every method you will use, you will face some losses along the way. And it is very important to use good money management techniques. Good money management can be to use a specific amount of money, or a certain percentage of your capital on every single trade, not to risk everything on one trade. Money management is the usage of a stop loss for every time we enter the market. Money management could be the differentiation between the risk associated with each trade. Not every trading signal we get from our method will have the same probability of success. Sometimes we will have a very good trading signal, i.e., less risks associated with this trade. It's a high probability trade, as we like to call it. And other times we will have a low probability trade, i.e., a trade associated with a bigger amount of risk. Money management is the ability to differentiate between a good trade and a bad trade, let's say, or a medium trade. Because according to this, you might increase the money you are going to risk on these trades. Can you still hear me properly, guys? Is the sound okay? Everything is fine? Okay, if at any time we have a problem with the sound, please let me know. So we agreed so far that we need a good method, an accurate method, a method that tells me what to buy and what to sell, where to buy and where to sell it. On top of a good method, we need money management practices. And the third important element of success is the psychology, the proper mental approach. And by psychology, we mean to have control over our fear, to have control over our greed, simply to have the discipline needed to be successful, simply to have the discipline needed to stick to our method and apply our money management practices to it. It is very easy to learn a good a working system, a method, a strategy. It's very easy. Money management is even easier. However, having enough discipline to stick to what we know works, this is the hard part. Now, in this webinar, I won't have enough time to discuss the three elements. We will focus a lot on the method, but hopefully in some upcoming webinars along the coming weeks, hopefully we will have enough time to discuss the other two elements of success. So let's start by the definition of technical analysis, going to the basics. What is the definition of technical analysis? Technical analysis is simply the study of the market action, the movements of the prices, through the use of charts, of course, for the purpose of forecasting future price trends. Let's think about and let's let this sentence sink into our minds. The study of market action or price movement through the use of charts for the purpose of forecasting future. So what are we studying here? Price movement. The market action is simply the way the prices are moving. Now, during my years of experience and training traders, I noticed that traders tend to use a lot of indicators, while technical analysis is not the study of technical indicators, is it? It is the study of price movement. So the best indicator is the price. All other indicators, or most of other indicators, are lagging. They are based on the price. They follow the price and they do not forecast what the price is going to do. Of course, we have some techniques that are considered to be leading indications of what could happen with price, like divergences and many other things. But the majority of indicators are lagging. They wait for the price to close, for the candle to close, and then they give us the reading of the indicator. So they tend to lag. That is why at Tradepedia, or that is why tonight, we are focusing on one single indicator, which is the price. We are going to learn how to trade a naked chart, a chart with no indicators on it, except the candles, of course. So we are going to learn how to focus on the most important indicator, which is the price. This will be our focus tonight. Now, we have we have various techniques, guys, to illustrate the price action on a chart. We have um, we can use a line chart, we can use a bar chart, we can use a candlesticks chart. At Tradepedia, we like to use candlesticks a lot, Japanese candlesticks, not any other kind of candlesticks, because they are simple, yet they serve the purpose. They include or incorporate the four important price elements, which are the opening, the closing, the high, and the low of the price movement. So when studying the price action, by using through the use of candlesticks, I will be able to analyze the opening price, the closing price, the highest price reached, and the lowest price reached. Of course, we don't focus on one single candle, but rather we focus on many candles in order to identify the trend. One candle might be a battle between buyers and sellers, but we are of course we want to know who's winning this battle, but what we care more about is to know who's winning the war between buyers and sellers. And to know who's winning this war, we need to focus on the trend. Now, the trend is the general direction of the market. It is simply the general direction of the market, of the security we are analyzing. Markets do not move in a straight line. Yeah, they move in zigzags, creating tops and bottoms. And it's not Habib who is saying this, nor is Tradepedia who came up with this sentence. It is Charles Dow, right? You know who's Charles Dow? He's the godfather of technical analysis. He's one of the most important um, guys in the field of technical analysis. Dow is the founder of the Dow Jones Index, the barometer of the markets. So this guy spent 25 years of his life monitoring the stock market behavior in the US. So he was monitoring the way stocks were moving, the behavior of the stocks. He studied 25 years of stocks behavior, and he concluded that prices don't move in a straight line. They move in zigzags, creating tops and bottoms. He was not trading, by the way, yeah? He was only monitoring the way the stock prices are behaving. So we can say that his observation is objective because he was not trading himself. Now, the sequence and directions of these tops and bottoms identifies the market trend. The sequence and direction of these tops and bottoms is what identifies a market trend. Price movements develop in three different directions and three different directions only. We have an uptrend, a downtrend, and a range. These are the only three directions that prices move. Let's together talk a little bit more about let's talk together a little bit more um, about an uptrend. Just give me a second. I'm having some technical problems with the PowerPoint presentation. Just allow me a second, guys. Sorry for that. All right, so let's discuss an uptrend. Can you all see my screen? Please type for me in the chat window if you can all see my screen and hear me properly. And sorry for the technical issue
We
we
can.
faced.
Looks great. Still sounds great.
Thank you, thank you. All right, so let us discuss together how do an uptrend develop. So basically, by definition, an uptrend is made up of higher tops and higher bottoms. So when we are analyzing the price of a security and we see candles going up, and then so after an upward movement made up of several bullish candles, as we can see here, the appearance of two big body red candles in the opposite direction will create a market top. So a top is made up of a bullish movement that is followed by two big body red candles. Okay? Not one, but two big body red candles. This is the first condition. The second condition, these two big body red candles must have a lower high and a lower low compared to each other. So the second candle must have a lower high and a lower low than the one before. Now I have a top. The market continue going down, and then you see after this bearish movement, the appearance of two big body green candles in the opposite direction, of course, with the second candle having a higher high and a higher low compared to the first, will create a bottom. Now I have a top and a bottom. What is the trend here? What is the trend we are seeing in front of us on the chart? We can't know. Yeah, I don't have enough information at the moment to identify the trend. I only have one top and one bottom, and as we agreed, it is the sequence of the tops and the bottoms that identify a market trend. So far I don't have enough information to decide what is the direction of the trend. I need more information. I need to see more battles going on between the buyers and the sellers. So I wait, and then I see the market prices moving up, breaking above the first top, and then again forming a top higher than the previous top. Of course, after the appearance of two big body red candles with lower highs and lower lows. Now something is changing. Now I can see the beginning of an uptrend. However, according to Charles Dow, it is only after I have a top higher than the previous top and another bottom higher than the previous bottom, and it's only after the break of prices above the second top is where an uptrend is confirmed. This is where I have a confirmed uptrend. Why is this uptrend confirmed? Because now it fits the definition 100%. Now I have a series of higher tops and higher bottoms. And of course, this price where will it be here or a bit higher, it will also print a top higher than the previous top. So now I have a sequence of higher tops and higher bottoms. That is why now, at this moment, a confirmed uptrend is created. So this is how we identify a confirmed uptrend. Now, from the moment I have an uptrend, do you guys have any idea until when prices will continue to go up? From the moment I have a confirmed uptrend, I assume that prices will continue to go up forever. As long as I have tops, each top higher than the previous top, and as long as I have a sequence of bottoms, each bottom higher than the previous bottom, this trend, this uptrend is intact, and I assume that it will continue to go up forever. So what can we expect from prices to do here? I expect the prices to break this top and print a higher top. Of course, after each move higher, after the surge to a new high, some buyers will start to take some profits. Other contrarian traders will want to go and start to pick the tops by selling this security or selling this share, and this will create a correction, a downward correction. This will result in prices going down. Of course, prices will go down as a result of some profit taking, but in an uptrend, most likely prices will find support somewhere above the previous bottom, where buyers will find prices attractive again to buy some more, and then they will enter here, and we can see that through the formation of the green candles, we can see that the bullish momentum is picking up again. And what do we expect here? We expect prices to continue going up forever. So as long as I have higher tops and higher bottoms, I have a good uptrend that is going to continue to go up for a very, very long time. All right? And this is what a very well uptrend looks like. Of course, the opposite is true. So here I have prices going down. I have a bearish movement down made up of several red candles, and then the appearance of two big body green candles in the opposite directions with higher highs and higher lows will form a market bottom. Prices continue up, and then again, after a bullish price wave, the appearance of two big body red candles, the body of the candles must be big, all right, will form a top. Prices continue down, break the first bottom, and then form a lower bottom. Now I can see the beginning, I can see the development of a downtrend. Is it yet confirmed? Definitely not, because according to Charles Dow, we must wait for a bottom lower than the previous bottom, a top lower than the previous top, and only after prices break below the second bottom that a confirmed downtrend is created. So I must have a top lower than the previous top, a bottom lower than the previous bottom, and only after prices breaking below the second bottom, the confirmed downtrend is created. Now, what do you expect prices to do here? Definitely continue to go down for a very, very long time. So I expect prices to go lower, print a lower bottom, of course, correct higher, find resistance somewhere below the previous top. Sellers will go in again, will start selling, pushing the price down and forming a lower top. And the same thing will keep on happening over and over and over. So, what is the prerequisite, guys, for identifying a trend? How do I identify a trend without using trend lines, without using moving averages, without using price channels, without? How do I identify a trend? Simply by looking at the sequence of tops and bottoms. Now, this information that I'm giving you is not something new, of course, for the majority of you. I'm sure everyone knows that because in every book you read about technical analysis, probably in the first chapter in this book, you will read that the market moves in three different trends: an uptrend, a downtrend, and a range. In every book, also, you will read that an uptrend is made up of a sequence of higher tops and a sequence of higher bottoms, right? And the downtrend is the opposite. It is made up of lower tops and lower bottoms. But in no book will explain to you guys how to correctly and objectively identify the right tops and bottoms in the market. Correct? The prerequisite for identifying a trend correctly is the ability to identify the correct top and bottom in the market. And this is where we will focus. So, two conditions are there. The first condition is I need to have two big body opposite candles. The second condition is that these candles must have higher highs and higher lows, or lower highs and lower lows. So if I go to Metastock here and try to identify what is the trend in front of us, what are the conditions we set? Let's start our analysis from the lowest point here. Okay, let's go together over the analysis process we just spoke about. We agreed that the market will go up, series of green candles. Let me make it a little bit nicer, this one here. So the market is going up, and then I have one, two red candles. Is this a market top? Can I consider this here a top? Remember our conditions. We must have two opposite big body candles. Now, no doubt that this candle here is big. How about this candle here? Definitely, it is clear that this candle here is not that big. That's why this here is not a top. Remember, a top should be followed by a downward movement. A significant, let's say, a significant downward movement. And here, I don't see a significant move in the opposite direction because I have a move in one big body red candle. The second candle is not that big. And to be able to identify if the candle is big or small, usually you should compare it to the previous 25 candles, almost a month. Okay, so we compare it to the previous 25 candles. Now, because this candle here is small, then this is not the correct top. Prices continue going up, up. And from this point here, I can see the formation of one big red candle, big body red candle, and another big body red candle, also with lower high and lower low as the second condition. So here, I have a top. Of course, the market went down, and then the formation of two big body green candles, and basically the breaking of this top will create the bottom for me here. So now I have a bottom, prices went up, up, and from here, is this a market top? Prices went down in one big red candle, another big red candle with lower low and lower high. So yes, here I have a top. And then from here again, prices start to go up. I have one big green candle, another big green candle with higher high and higher low. No need for these two candles to be consecutive, by the way. We can have in between them smaller candles. So definitely this is a bottom. And the moment prices break above this top here, we assume that an uptrend, a confirmed uptrend, is created. Now the question, is this a top? You can keep doing this exercise and getting a bit confused if this candle is big or not, comparing it visually to the previous 25, or you can simply attach our prop, our prop indicator, our tool that we created that will help us in this job. The Avramis swing indicator is an indicator. So by dragging and dropping it here on the candles, this indicator will automatically go and identify the correct tops and bottoms in the market. And there you go. Simply, this indicator is doing the hard job for us. This indicator is calculating the sizes of the candle. It's identifying the percentage retracement, the sizes of the candle, momentum, and working on all these different factors in order to correctly and objectively identify the correct top and bottom in the market. And now all you have to do, guys, is simply to look at the sequence of the tops, the sequence of the bottoms, and then you can simply, easily identify the direction of the trend, isn't it? Identifying a trend is not difficult. The difficult part is to be able to identify the tops and bottoms. And once you can identify the tops and bottoms, identifying the trend can be very, very simple. So now all you have to do is follow this sequence of tops and bottoms. So you see here, even we have a big movement, counter trend correction. This is not a top because I don't have two big red candles. Market keeps going up, come down, continue going up. And what can we expect from prices to do here? Although some would like to sell here, but because I have tops higher than the previous tops, and I have a bottom higher than the previous bottoms, I have a sequence of higher tops and a sequence of higher bottoms, I assume the trend to be intact and assume the continuation of this uptrend forever. And here again, the same story, right? What do you expect from prices to do here? Again, break this top and print a higher high, a higher top. Because this is what happens in an uptrend, right? So this is how we identify the trend. And because we have now this indicator that will help us identify the tops and bottoms, the identification of the trend becomes very easy. Of course, the range is made up of horizontal tops and horizontal bottoms, and it's no nuclear physics. No need for the tops and bottoms to be exactly on the same level. It is it is enough to say that when you don't have an uptrend and we don't have a clear downtrend, then we assume the market to be moving sideways or moving in a range or in an unidentified trend. These are the three trends. Of course, Charles Dow also concluded, he observed and concluded that a trend is more likely to continue than to reverse. And here we can think about it logically. If a company is doing good, if a company is doing good, there is more demand for its stocks, so the stock price will be going up. And if the company is doing good, what is the most probable thing to happen in the coming future? The most probable thing is for this company to continue doing good. The most probable thing is for this company to continue expansion, opening up to new markets, increasing its profitability, creating new products, new services. We cannot expect this company to collapse. The most probable thing is for its stock price to continue going up because this company is doing good. This is the most probable thing. Yeah, of course, there is a probability for the CEO to die in a heart attack and then the stock will collapse. But the most probable thing, if the company is doing good, then it will continue to perform well in the future, and thus its stock price will continue to go up. So when a trend is assumed to be in effect, it is assumed to be in effect until it gives a clear signal that it has reversed. As long as I have higher tops and higher bottoms, I have no signal of reversal, no sign of reversal up to now. And that is why I assume the continuation of this trend. That is why we always hear the saying, the trend is your friend. Never go against the trend. Simply, guys, by following the trends over different time frames, trader can increase their profit making opportunities. Simply by trading with the direction of the trend, we can increase our probability of success. So, as decisions every trader must take, when to buy, when to sell, and when to do nothing, we can conclude that we should buy only in an uptrend, and we should sell only when we have a downtrend. And of course, when we have a range, we can go shopping, we can go fishing, we can go drinking, but the best thing to do is not to press the button. Do not trade in a range because the probability is 50-50, right? Buyers and sellers are fighting and no one is winning over the other. There is no clear direction. I'd better wait for one party to take control and then take the side of the winning party. This is what we need to do in order to raise our probabilities of success. Now, price action, prices will move from one phase to another, from an uptrend to a downtrend, and from a downtrend to an uptrend. Price action, price patterns can be used to identify when we move from one phase to the other. Okay, so here in an uptrend, after this nice uptrend, the formation of a certain patterns will guide us and will identify a change in the trend, will give us signs of reversals, and then we can conclude the beginning of a new phase. So trading with the direction of the trend is very important. But what is the best thing to do? What is better than trading with the direction of the trend? The ability to trade with the direction of the trend from the moment it begins, right? This is the best thing to do. To catch the trend from the moment it begins. And to be able to do so, we need to learn the trend reversal. So identifying the correct tops and bottoms will help us identify the trend direction and will also help us identify the trend reversal, the switch from one phase to another. And this will allow us to catch the move from the moment it begins. Now, let's talk more about reversals. Let's talk about the core of the method we are using today. So now I can see the beginning of a downtrend. I have a bottom lower than the previous bottom. I have a top lower than the previous top. And here I have the confirmation of a downtrend. Now I have a sequence of lower bottoms. I have a sequence of lower tops. So the downtrend is there and is there to stay. As you can see, prices are correcting up, facing resistance. Sellers are joining again, pushing the prices lower. We have a break of the support. We have a dip to a new low. Prices will correct due to some profit taking. A lower top will be formed. So now what I am expecting from prices to do here, guys? As you can see, I have a clear confirmed downtrend made up of lower tops. T4 is higher than T3, T3 is higher than T2, and T2 is higher than T1. Also, it is made up of lower tops and lower bottoms. B2 is lower than B3, B3 lower than B4, and B4 is lower than B5. So simple things. A trend, a downtrend is made up of two elements. Is made up of lower tops and lower bottoms. Simple formula. Downtrend equals lower tops plus lower bottoms. Now here, what I expect from prices to do. The stock price is going down, most probably because this company is not doing very good. If this was the price of euro, or if this was the price of sterling, then I know that the economy in the UK is not very good at the moment. And if the economy is not growing at the moment, inflation is not rising at the moment, they are facing some problems with the European Union over Brexit. What is the most probable thing to happen tomorrow? It's for this downtrend to continue. So I will be expecting prices to break B2 and form a lower bottom, because this trend is assumed to stay going down until it gives clear signs of reversal. Now, while waiting for the price to go down, one time sellers will fail to push the prices lower, and buyers will enter the market and will defeat the sellers. They will defeat the sellers by pushing the price higher with two big green candles. And now what happened? Now I witnessed the formation of a bottom higher than the previous bottom. Now I have B1 higher than B2. The sellers failed to take the price below B2 as expected. And because now I have a bottom higher than the previous bottom, I lost the sequence of lower bottoms. This downtrend lost 50% of what constitutes it, right? It lost one component out of the two components that form a downtrend. Is it completely destroyed though? If we look here at this downtrend, is it completely destroyed? Not yet. I still have lower tops. So I still have one element from the two elements that forms the downtrend. So what can I say here is that this downtrend lost 50% of its strength. It became a weak downtrend, not yet destroyed. When will this downtrend become completely destroyed? This downtrend will become completely destroyed when it loses the second element, when it loses the lower tops. So when prices move above this top, this will be the moment that this downtrend is completely destroyed. And this is the moment that I assume a new trend is in place. This is where I assume that a new phase is beginning. The break above the previous top, because the break above the previous top will destroy the sequence of lower tops. I will no longer have lower bottoms and I will no longer have lower tops. So the first sign of reversal is the failure to continue in the same direction, the formation of a higher bottom, and then the confirmation of the reversal comes with prices moving above the previous top. These are the two signs of reversal. This is where I assume the downtrend reverses to an upward movement. This guys here, this pattern is known as the failure swing in technical analysis. It is the most accurate reversal pattern in technical analysis. It has a probability of success that can reach 80% on the daily time frame. Of course, a little bit lower as you go lower by the time frame. But on the daily chart, a failure swing that comes after a downtrend has a probability of 80% of reaching its targets. And this is how we should trade. Where is the best place to buy if I want to buy? With the break above T1. So the moment I see the first sign of weakness, the moment this downtrend becomes a weak downtrend with the possibility of reversal, I prepare myself, I sell the car, I sell the house, and I place an order to buy just above T1. No? Because as prices move above T1, the downtrend will be destroyed and the new phase is assumed to begin. So using the indicator, using the Avramis swing that can identify the correct tops and bottoms in the market will not only help me identify the direction of the trend, but will also help me identify the reversal. And it will allow me to catch the new phase from the moment it begins. Clear? Any questions? Of course, looking here, we tried to code the market. So what we did is we tried to give different numbers to different phases of a downtrend. If you see here pattern number 2, you can clearly identify a downtrend, right? And if we look at pattern number 4, it looks a bit different, but it is still a downtrend, isn't it? I have lower tops, I have lower bottoms, so I have a downtrend. And if I look at pattern number 6, what is the trend here? I also have lower tops, I also have lower bottoms, so I have a downtrend. Now, what do I expect from prices to do after pattern number 6? Because it's a downtrend, because I've pattern number 6, because pattern number 6 is a downtrend, I expect prices to continue to go down, break B1, and form a lower bottom. So I am expecting prices to move from pattern number 6 back to pattern number 1, back to pattern number 2, right? Break below B1 will take me back to pattern number 2. And from pattern number 2, prices will not go down in a straight line, right? So at some point, prices will correct in the opposite direction and form a bottom lower than the previous bottom. And from pattern number 2, we will go back to pattern number 4. From pattern number 4, prices will reach a resistance and start to go down again. Go back to pattern number 6. And this will keep on happening from 6 to 2, from 2 to 4, from 4 to 6, from 6 to 2, 2 to 4, 4 to 6, until one time I will be expecting prices to break B1 and move back to pattern number 2, except this will happen. Sellers will fail to push the price down, and a bottom higher than the previous bottom will be formed. What happens here to the downtrend? What is the trend here in pattern number 8? Do I have lower tops? Yes. Do I have lower bottoms? Not anymore. I have a bottom higher than the previous bottom. So this downtrend lost one element out of the two elements that constitutes it. That is why I say that this downtrend became a weak downtrend. A weak downtrend with the risk of reversal. Every time you see pattern number 8, what do you see, guys? For me, every time I open my chart and I see a trend, pattern number 8, I see an opportunity. It's an opportunity to trade with the direction of the new trend. It's an opportunity to buy. Where will I buy? I will buy only after the break above T1, because the move above T1 will completely destroy the downtrend and will create a new bullish phase. Simple, no? It does not, the strategy does not need to be so complicated. It can be as simple as this nice method I'm showing you today. All we have to do is use price as our indicator. Price action. Everything is discounted in price. Of course, the same story after an uptrend. So we have an uptrend that's been going on and on and on, made up of higher tops and higher bottoms. I am expecting buyers to push prices above T2. However, at one time, after this long uptrend, buyers will fail to push the prices above T2, and I will have a top lower than the previous top. This is the first sign of weakness in an uptrend. I lost the sequence of higher tops. I no longer have higher tops. But is the uptrend completely destroyed? Not yet. When will the uptrend be completely destroyed? The uptrend will be completely destroyed when it loses the higher bottoms. When will it lose the higher bottoms? As soon as the price drops below B1. So you see, the drop below B1 is the pivot level that will switch me from an uptrend to a new phase. And for anyone wanting to sell, this is where he should be going short. So the move below B1, I should close all my long positions and go short. This is the sign of weakness, and this is the confirmation of the reversal. Going back to our example, as you can see here, prices were going up in a sequence of higher tops and higher bottoms all this time. And here, I am expecting prices to continue to go up, right? However, the formation of a top lower than the previous top resulted in a clear sign of weakness in this uptrend. What happened to this nice uptrend that was going on for years and years? For the first time since 2001, something has changed. Since for the first time since 2001, I have a top lower than the previous top. So buyers are getting defeated for the first time. But did the downtrend, is the uptrend completely destroyed so far? No. It lost 50% of its strength, but it's not yet destroyed. It will only be destroyed when prices move below this bottom here. So only at this point I am allowed, after this point here, I am allowed to sell. And as you can see, the moment prices broke below this bottom, we witnessed a new phase in the market. A new downtrend started here. Prices continue going down, and then here, what happened? I was having a sequence of lower tops, I was having a sequence of lower bottoms until the buyers entered again and formed a bottom higher than the previous bottom. So here the downtrend became completely destroyed. The downtrend became completely, not completely destroyed. The downtrend lost 50% of its strength. And now I can say that the move above this top is the move that will create a new phase for me. And there you go. You can see that the price went a little bit sideways here, but again, now prices are going in a sequence of higher tops and a sequence of higher bottoms. Simple and easy. And instead of opening one chart after the other, moving from one time frame to another, trying to identify the direction of the trend, all you have to do is download this indicator. It will automatically identify for us the uh, the correct tops and bottoms in the market. Going to the daily chart, what can we see here? Prices were going down, lower tops, lower bottoms. Sellers failed to push the price lower than this bottom here in May, and then the break above the stop was the confirmation of the beginning of a new phase. And you can see here prices are going up in a nice uptrend, forming higher tops, higher bottoms, continuing up. And then what do we see here? The same formation. Instead of failing to go higher, price failed on the same level. Gave us a double top or a bull trap. A pattern, all these patterns can be summarized by one pattern called the failure swing. Prices failed to break this top and then broke below this bottom. And from there on, you can see that prices are going down in a downtrend. Now, here I'm expecting prices to do what? To continue this sequence of lower tops and lower bottoms. However, I have one big green candle so far. I need one more green candle for a bottom to appear. And then if buyers manage to form a bottom here and manage to take the prices above this price, above this top, this will be the end of the downward phase and the beginning of a new phase, of a new bullish phase. So all I'm not forecasting in this method that I'm discussing today, we remove the guesswork. All we are doing is following the smart money. We are not anticipating, we are not guessing, we are not forecasting. We are just following. We are using the price action to understand what are the majority or the big traders doing, and then we are taking their side. So here, if the buyers manage to push the price above the stop, this will be a reversal. This will be the beginning of a new phase. So here, I can see an opportunity to buy above the stop here. This is how we trade using one single indicator. I didn't use any moving averages. I didn't use any channels. I didn't use any trend lines. Of course, we can use all these. We can use a lot of nice indicators, and we do use them, but we use them to confirm the direction of the price action. And we will use them more in money management. We will use them to differentiate between a strong trade and a medium probability trade, or even a low probability trade. So if the trend indicators confirm the price action, we have a good probability trade, and the opposite is true. If I'm buying here, for example, and price is still going down in a downward channel below the sorry, below the downtrend, then maybe this trade is not that good, because the trend indicators are not confirming the price action. But the opposite is true. Now, the good thing about this tool, it's not only identifying the tops and the bottoms, but we can also scan the market. So here you can go to the Explorer, to the scanner feature, and then I'm gonna check here. I'm gonna search for pattern number 7, which is a bearish reversal, and I'm gonna search for a pattern number 8, which is a bullish setup. Okay, I'm going to scan, for example, the Saudi market, because we are now discussing the market here in the Middle East, and I guess most of our attendees are from the Gulf. Let's discuss the Saudi Stock Exchange. I'm going to scan the 202 shares in the Saudi market, and I'm going to scan for patterns number 7 and patterns number 8. Let's say on the hourly chart. Okay, I'm going to scan the hourly charts of all these shares, 202 shares, and I'm going to look for patterns that are patterns number 7 and 8. This is pattern number 7, which is a setup for a bearish reversal. And of course, the opposite is true for pattern number 8, which comes after a downtrend and reverses the downtrend. So we can here run the exploration, and now we can see that the Metastock is scanning for pattern number 7 and pattern number 8. We are scanning now the 202 shares, and we will wait a little bit for the report to come out, and we will have our trades ready in no time. So scanning for pattern number 7, I can see here that I have 3 results. So 3 shares on the hourly chart are already having pattern number 7, a possible reversal. And now we are scanning for pattern number 8. And I have another 2 reversals. Okay, so this is my report. What am I gonna do here? I'm gonna choose this, for example, open the chart, and look here. I have the daily chart showing a clear downtrend. Prices broke below the previous bottom. And now on the hourly chart, so what I'm doing, I'm looking at this part here of the move. I'm looking at the move from 1340 all the way to 1150. So basically this move here from 1340 to 1150. And what can you see here? You can clearly see that the market is going in a downtrend. And then here, the formation of two big green candles form the bottom higher than the previous bottom. I have a weak downtrend. And if prices manage to break above this top tomorrow, then I should be looking to buy. Traders should be looking to buy above this top because this is an indication that the daily chart here should be starting a correction against the downtrend. Of course, contrarian traders may decide to take such trades against the trend, against the overall trend, and other traders might scan for better opportunities, with the direction of the trend. So basically, when I have a downtrend on the higher time frame, I I'm only interested in selling, for example. So maybe we can see other examples here. I'm going to choose this share here. So look here. This is the daily chart. The daily chart is in an uptrend. Prices are going up. Now we have a correction down. So I have an uptrend. Prices are going against the trend now. What I want to buy, right? Because this uptrend will stop somewhere here at the support zone. As you can see here, the market is reaching a support, and I want to pick up a good time to buy. So what I can do is I'm scanning for this reversal, and you can see here the move down is clearly prices failed to go below this bottom. The move above this top here, the move above this top will identify a good opportunity for buyers to enter. This is the sign from the price action itself that this correction here ended and a new phase, a new bullish phase is about to start. This is a sign that the downward correction has ended. Buyers are buyers are entering the market around this support and should be pushing the price higher towards a new high, probably above this top here. Yes, we will cover, of course, how to get this very, very shortly. So you can see all you have when you have this tool, you can download it, you can go to the Explorer, and you can scan for the reversal patterns. You can scan the Forex market, you can scan the US stock exchange, the S&P, the Nasdaq, the Dow Jones. You can scan whatever you want, whatever market in the world you want. You can even scan all the markets and pick up the best reversals and trade them. Now, just let me summarize everything because yeah, entering the market is good, but we also have to learn how to exit the market. So after a downtrend, I know prices will fail to go below this bottom. I have a good bullish setup here, a bullish reversal. I will set my entry level above T1. You should set your stop loss below B1, guys. No need for you to put your stop loss below B2 because remember, if this uptrend begins, it should be constituted of higher tops and higher bottoms. So prices can go down but should not break the previous bottom. That is why a good place to place your stop loss would be below B1. We will use Fibonacci for our targets. We will use Fibonacci extensions, not retracements, from T1 to B1. We will draw Fibonacci from T1 to B1, and we will take the extension of 161.8% of this move, and then 261.8% of the same move, and 423% as our targets. Forget about target 3 for now. What I advise you to do is pick these two targets. If you are trading with the direction of the trend, you can aim for the second target. If you are trading a contrarian strategy against the general direction of the against the higher time frame, go for target 1, place your stop loss, and this is how you trade. Okay, so here, going back to our example, you come and you draw Fibonacci from this top to this bottom here. You take target 1, 161 as the first target, 261 as your second target. When you are trading with the direction of the higher time frame, so here I am buying, the higher time frame is an uptrend, I can go for target 2, even for target 3, because I know that the market is going to print a higher high. So you can aim for target 2 and then place your stop loss below this point here. If we are looking on our previous example, also this tool will automatically, guys, highlight for you the Fibonacci levels. As you can see, these red lines here is another tool that you can have. It's called the Auto Fibo. It's just drawing the Fibonacci automatically whenever we have a reversal, a possible reversal. So from here on, I'm trading against the direction of the higher time frame. So no need to be aggressive and go for the second target. You can aim for target 1, close half of your position, move your stop loss from this bottom to the entry level, and then look for the other target if the market continues to go up. This is just a simple way to trade using price action with the direction of the higher time frame. All right. So usually, guys, we are selling at Tradepedia this indicator for $500, and we are selling the scanner for this indicator with the scanner version for $1,000. However, as a special offer in collaboration with MetaStock, for everyone who attended today, you will have you will be able to get the Avrami swing indicator together with the scanner feature for free, totally for free, if you renew your subscription or subscribe for 1 year through Tradepedia. So if you renew your Metastock subscription for 1 year, or you subscribe as a new user for 1 year through Tradepedia, you will have the opportunity to have this tool together with the scanner feature totally free for life. You will be saving $1,000 on your uh, you will be saving basically $1,000. You're getting Metastock for the same price as a yearly subscription, and on top of that, you will have this amazing tool free for life to use it on Metastock. Sounds good? I know 1 hour is very short. I know 1 hour is very short. For everyone who's interested to know more about the courses we deliver and the workshops we do at Tradepedia, please feel free to contact us. Feel free to contact us. Send us an email on info at tradepedia.com. Ask for your subscription and ask for your tool. Also, if you are interested in other workshops, visit our website, send us an email on info, and our sales team will gladly contact you and give you more information about the courses, the workshops we deliver. And I hope you enjoyed this webinar. Looking forward to hear from you guys. If you have any questions, please, now is the time to ask. If not, it means that I'm a very good instructor and I explain everything clearly to you.
There are some questions, but honestly, I think you were a very good instructor, nonetheless.
Thank you. Thank you very much. I cannot see the questions, unfortunately. I can only see the chat window.
All right,
I have no ability to see the questions.
Um, Hanny Mayer asks, how much is a subscription for 1 year normally to Tradepedia?
Well, I guess it's the same. It's the same. We charge nothing more than what you guys do, so it's the
Okay.
same subscription that you can have from Metastock.
Yeah, so there's a couple of different options there. It really depends on if you own the software or if you're leasing it, etc. I would contact Tradepedia or feel free to come into metastock.com/sales chat and they can kind of cover your account with you and we'll make sure that you get the Tradepedia add on. Let's see here. If I were to enter an established uptrend, should I wait for two highs and two lows, or the current top break in a sequence of a high is good enough?
Well, that's a very interesting question. Uh, being conservative. So the good thing and the bad thing about Charles Dow. The Dow theory said that you need to have two higher highs and two higher lows to confirm the trend, to confirm an uptrend. Now, the downfall of this technique is that you will miss a big chunk of the move. Now, if you have a downtrend, okay, if you have a downtrend, so if you have a downtrend and then you see the reversal, you can buy here because you are not buying and looking forward to marry this trade forever. As you noticed, we are buying, placing our stop loss, setting short term targets. So we have target 1, 2, and 3. When these targets are reached, we are closing our position, waiting for the market to correct, and then we are buying in the same way using lower time frames. And even if you closed your position here, the market goes down, come up, break the second top, you can buy above the second top. Again, place your stop loss below the bottom, draw Fibonacci from this top to this bottom, and then close again here. The market goes down, you buy using lower time frames here, or you wait for the break of the top, you buy again. So what we are doing, as long as we have higher tops and higher bottoms, we are accumulating, or we are buying, selling, opening a new trade, closing it, opening a new trade, closing it, and we will keep doing this until one time we will buy, or if you are waiting to buy here, the market will fail to go above this top and then break this bottom. And here you will close all your long positions if you have any position holding, if you are holding any positions. And then from this moment onwards, you will, you should be selling and going short. So as you can see, this technique does not allow us to buy at the lowest point and does not allow us to sell at the highest point. So we won't eat the head and the tail of the fish, but we will catch the easy and nice part of the trend. So definitely we will not wait for the second top. From the moment the downtrend is destroyed, we go and we buy, assuming a new phase is about to start. Clear? I hope I clarified this point.
Yes, yes. Someone is asking, when is the offer valid until? It looks like they're on a trial of Metastock right now. If you currently are on a trial of Metastock and you choose to purchase Metastock at the end of that trial or continue a subscription, we'll make sure um, that we get
Okay,
you
so we
the
will have
system.
the offer running all the way until the end of November.
Okay, wonderful.
Okay,
Uh,
so a month from now, almost a month plus. So we will keep it running until the end of November. Anyone who attended this webinar and wants to renew his subscription or subscribe for Metastock, he will have on top of his subscription this very nice tool that will allow him to scan the markets, pick up easy trades, and that would be a very nice way to start trading profitably.
Another good question here. The failure swing, is that good for any time frame?
Well, as I said earlier, this failure swing pattern has an 80% probability of reaching the first target. Now, this 80% accuracy is on the daily chart. Okay, of course, as you go lower by the time frames, this this accuracy will go down. So we are talking around 75% on the 4 hours. If you are trading commodities and currencies, it could reach between 67 68% on the 1 hour. And of course, swing trading is not made for very short term time frames. So anything below the 1 hour is not recommended for Forex, and anything below the 15 minutes is not recommended for equities. But 15 minutes and up for equities, you are talking about an average accuracy of 70 plus percent. And for Forex, 1 hour and above, we are talking about an accuracy of 70% plus.
Okay. We have a couple of questions about pricing for Metastock. If you're wanting to grab Metastock end of day, you can actually do so for as low as $59 a month. So throwing this in on top of that, it's an amazing deal. I really like this system, and the main reason I like this system is it's very, very simple. It's very, very straightforward. Not a lot is left to the imagination. You're trading with the trend. So over at Tradepedia, you guys have done an amazing job putting this system together. I think it's very straightforward and it's very, very easy to use. So if you don't have Metastock and you want to start using this system, I'll have Habib put that contact information back on the screen here, and you can contact them for a trial of Metastock, or you can contact
They can
us.
even contact you, yeah, they can contact you directly, and
Mhm.
then just you can verify that they are eligible for this offer, and then just contact us to send them the tools accordingly. That would be even easier for them.
Yeah, and if you guys in the audience, if you want to go to metastock.com right now, go to metastock.com /sales chat. We have guys manning the chat function right now. Just say that you're in the Tradepedia webinar and you wanted to take a trial, and then I'll make sure that you get this system. Um, there's some questions about, does the system work for all instruments? In other words, Forex, stocks, etc.
Yeah, the beauty of trading price action is that the system works on everything. After all, we are only analyzing price, right? We're not using any indicators. We are focusing 100% on price. And that is why this method works great on Forex, on commodities, on equities, on fixed incomes, on everything. It even works on options. We are only guys trying to know what the big traders, what the smart money is doing. We are not forecasting, we are not anticipating, we are just following. And this is the beauty of it. We are entering a little bit, we are not catching the ultimate low, nor we are catching the ultimate high, but we are able to go in smoothly, take a nice big chunk of the trend, take our profits and leave. This is the beauty of it. And it might seem not complicated at all, but you you cannot even understand the work that went through developing this indicator. There's lots of complicated things happening in the background in the algo that works to identify the correct tops and bottoms. As I said, this is the prerequisite for everything. Correct tops and bottoms implies correct trend identification. Correct trend identification implies correct trend reversal. So to catch the reversal, you should catch the trend. To catch the trend, you should catch the correct tops and bottoms in the market. And this is what this indicator is doing. A lot of things happening um, behind the screen, if you want. just a way to say it. And simple things work. No need to complicate things after all.
Yeah, I couldn't agree with you there. They're much more. I mean, keeping it simple is incredibly important. Time for about one last question here, and this comes from our YouTube stream. And they ask, can the indicator be changed at all to reflect a different percentage of swing?
Well, I get asked these questions a lot, but never on the swing. I get asked these questions a lot when I'm explaining other indicators, and my answer is always, you are not smarter than the guy who created the indicator. We know this indicator works on these parameters. Why do you need to change it? So again, guys, it works as it is. You can change it if you want, but this is how it works. It's been tested and it's giving a very amazing results for the last 9 years. So no need to recreate the wheel. Take it as it is, use it as it is, and enjoy it.
Yeah, if it's not broken, don't fix it.
Exactly. Exactly.
Wonderful. Well, uh, we're out of time here, but a special thanks to Habib. It was a wonderful presentation. You explained the system very, very well. We're excited to be, partnering with you guys and offering this system through Metastock. Um,
My pleasure. My pleasure.
Wonderful. So, all of you out there in the audience, again, a couple of ways to take advantage of this. You can contact Tradepedia directly. Their information is on your screen right now. Or just come into metastock.com/sales chat. We have guys standing by right now that are able to answer any questions, set you up with trials, cover different instances with your current account, and see how we can get you set up with this add on. So, I think it's a wonderful add on, very, very simple. You saw the power of it here, and we're happy to offer it through Metastock. So, in conclusion, everyone out in the audience, thank you so much for attending. If you have questions, feel free to contact us or Tradepedia. Habib, another special thanks for you. It was a wonderful presentation. Um,
Thank you, guys. Thanks for everyone who attended. Thanks for the time. I hope I was able to channel the knowledge to you in this short period of time. And remember, this is just a small part of the system we use to trade. So now we only explained one entry setup using the failure swing. We only explained it on one time frame. But if you are guys, if you like the system and you think that this is what you need, this system suits the way you would like to trade, please contact us because we provide a workshop that is a 1 month or that spreads around 1 month, almost 30 hours of training in order to teach you everything about this system. So it will allow you to we will teach you multiple time frame trading, how to incorporate all the different time frames at once. We will teach you three different entry setups. Now we only learn the reversal, but we also have the correction and the continuation entry. Uh, we will talk more about money management during this workshop, and we will also talk about discipline and the proper mental approach. Feel free to contact us for this workshop to know the fees and the scheduling. And I'll be looking forward to more and more webinars with you guys. Maybe we cover different topics in the future.
Yeah, it sounds great. With this system, it's there's a lot to expand upon. However, it is straightforward enough to be able to use on its own. So, definitely let us know at Metastock. If you have questions, contact Tradepedia. Um, Come into our chat, get it set up with a trial. Thanks again, everyone, for attending, and as always, happy trading.